All right. Well, hello, everyone, and welcome out to your weekly midweek currency room. This is Socket here. And as always, we'll be taking a look at markets. Definitely a lot going on. This is definitely a good time to be active in the markets, and we have had really good trades going so far. So let's get into it and break it down by looking at broader markets, then take a look at what's happening on the news front, take a look at the currency baskets, and then we'll get into some setups here. So let's get into it.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So getting into our market analysis, let's just see what happened so far this week. So we all know that yen has been the biggest mover. Now, that is really what has really caused a big move in the markets, in the currency world. Now, outside of that, really, we don't have a whole lot of data because the government shutdown, continues. So we are now in the second week, and I actually was reading reports that it's supposed to last like 24 days, which could be the second longest in history. Remember, going back to 2018, the longest one we had was like 35 days. So, we have to kind of keep an eye on that one. But until that pushes longer, we are not going to get a lot of key data, which is going to be interesting, especially as we get the next Fed meeting. And, then this is where they're kind of flying in the dark. So I think that's going to make it interesting later this month. But outside of that, we don't have a whole lot of impact on the markets with this shutdown. The equity market continues to make all-time highs, so really, not a whole lot of change there. Now, the biggest surprise yesterday was the RBNZ. Now, they cut rates by 50 basis points, and that was twice of what they were expecting. Markets were expecting a 25 basis point rate cut. And then that 50 basis point was much bigger than expected. We saw a big sharp move down in the Kiwi. We'll take a look at Kiwi and see where we are at. Definitely some interesting price action. And then, like I said, the yen is on the track of the biggest weekly loss since September 2024. So if you really recap to last year, August, September, late August, early September, we had really a lot of movement in the Japanese yen. If you remember, the movement was quite similar what we're seeing so far this week. And this is where trading for longer makes you, definitely allows you to see things in a bigger picture. And, a lot of times you see these similarities. And, when I saw this price action, that really reminded me of last year in 2024, where we saw a lot of movement in the Japanese yen. So when you take a look at the movement and the percentage change, you can see this is 2.91% to the downside. And if you really look at the Japanese yen results, back in August and early September, we actually had two 3% down weeks. So you can see that was about a 6% move. So yen does this sometimes. And again, this is where when you look back in data, we have seen this happen over and over. And, and we are just on the track of that biggest weekly loss. But again, at the same time, yen continues to be the weakest currency, so it doesn't mean it will stall right here. What we are seeing is some nice basing patterns, some bear rallies, but again, nice continuation patterns. That's what we're noticing here in the yen. So yen goes again on the top of the list here, but you can see that this is where we talk about being active in markets when everything is moving. And I mean, look at the percentage moves. Remember, there are certain weeks that I come and I say, well, not a whole lot of movement took place. Things are not so much. But again, take a look at dollar up like 1% on a basket. So really, the biggest mover that we had was the dollar yen. And again, if you recall last week, we actually took a trade. And I mentioned that in the Discord. We actually got a very nice long in dollar yen that I'm still in that trade. So that is really the biggest mover. But again, if you take a look at Canadian dollar, which is following the suit with the USD, and that's doing really well. I mean, take a look at the Australian dollar, that continues to do well. We are seeing the Kiwi, and we'll talk more about Kiwi when we look at the chart. But that Kiwi is actually not the worst currency. You know, if you look at like what the news was yesterday, and this is where we talk about the news versus the price action, and the price action doesn't really reflect, you know, the news that we got yesterday. We had the British pound actually surprisingly do well. You can see that where is the next underperformance after the yen is the euro. And we actually took a euro trade, a euro dollar short position yesterday, which is actually doing decent at this point. So this is where, you know, you gotta strike when the iron is hot. And that's just really where we are in the markets. And we'll take a look at and see, you know, this is what we have happened so far. And again, what's next? You know, are we about to see that continuation pattern? And that's the big question here. Now, when we take a look at outside of the currency market, you can see that, you know, markets are kind of doing its own thing. I mean, gold is, if you really want to take a look at what we call something going parabolic, you will hear that term where something just keep rising and it just goes up so much in a so short period of time. Gold fits a perfect example of that. And, it continues to run here. So that is going parabolic here. Oil, again, goes back and forth. Crypto is not really taking a big part. Remember, we had a surprising rally last week, and I talked about, you know, this is just got us to the top of the range, and you can see that we just stalled right at the top of the range. Now, you can see that markets are still chugging along. Not a big percentage move. This is where I think we're definitely getting good price action outside of the equity markets, where, you know, percentage-wise, not a big move there, but then we're getting a lot of movement in the currency markets. Now, in the cryptocurrency world, you can see not a whole lot there. Bitcoin Cash being down the most. So I'm not really a big fan of the crypto here because, again, it's all about being, trading the right thing. And we have to have a lot of movements in the currency world that we just don't need to really worry too much about the cryptos here. So now when we take a look at market outlook, anything has changed. Well, this is where we talk about correlations. We take a look at what the broader market theme is. So really not a whole lot of change in the broader market theme. We can see that we are still sitting at the all-time highs. And despite that, we talk about the news and the price action. So, you will think that the markets will struggle around this shutdown time. And, we're not really seeing that. All we are seeing is a bit of a consolidation. So always focus on that price action. Volatility remains low. So that's another thing that hasn't really changed for the last few months. We had early start of the year where there's so much volatility, and then the volatility has really calmed down, and really haven't seen a big spike there. So now let's take a look at the news front. So like I said, we have this vacuum of data that out of the US that's not being released. And once the shutdown is over, a lot of that data will be released. I sure wanted to look for a reference. I mean, like I said, last big shutdown that happened was in 2018. That lasted for 35 days. So you can actually go back in time and see, okay, when that shutdown was over, how quickly all the data was released, what kind of data did we get, what kind of price action we get. The history is a great teacher, to go back in time and see how markets react around those times. So here we are. Outside of the U.S. data, it looks like we're going to get the meeting minutes. So let's go back to meeting minutes. So we are about to get the meeting minutes later today. Again, I think if you really look at where market expectation, and I think this is where one of the areas where I'm still doubtful or questioning. Here's the expectation for rate cuts. The market's still expecting for October to have a rate cut, and then you go to December, you have a rate cut. And there's, again, very high chances for a rate cut around those times. Now, I've seen the story play out in the last couple of years where market got ahead of itself, and then the data doesn't really support it, or something happens and market reprice, and then we see a big move. And we've seen that in the last couple of years especially. So we'll see what happened this time around, but that's really where we are. And if you look at the Fed They're still concerned about inflation. So I think there is that mismatch there. So that is not going to balance itself unless we get stronger data, which will then retreat those expectations. So I think you got to watch out for that, which I think will be something to pay close attention to in this last 2 months of this year, like November and December, and even most of October. I think we're going to pay close attention to the data. So again, those are data dependent. If the data gets better, we might see a retreat there. So outside of that, you can see that we have Canadian employment report on Friday. That's the next trade that we'll be taking a look at. Remember, we didn't get the data out of the US, but we have the data out of Canada for the employment. Lately, their employment numbers have been pretty bad. So if there's any improvement there, I will be surprised that we see a bit of a continuation in the CAD there. So, and then we get the consumer expectation, which I don't really think that's a big one here. So, pretty light on the news front. And this is actually a bit of a blessing because, these news events, when markets are doing well on its own, these news events can really, be tricky because then if you're in a good trade, news event comes, and you have to really decide, I want to hold or not. So right now we're getting a lot of movement without a whole lot of news front. So this actually makes it easier to hold trades and then carry on some of the trends. Now, when we take a look at velocity, and it's pretty clear where the velocity is the yen. That's really where the velocity is. Where is the movement that we're seeing? Relative strength. That's the Aussie. We are seeing a little slight pullback in the dollar, but I will take a look at dollar chart pretty shortly here. But again, these are the ones that actually been doing the best here. Dollar and CAD are like one of the strongest currency. Now, Kiwi, surprisingly, is right at the zero, which I think we have to take a look at it. I talked about it in Discord earlier today. Looking at the price action, it doesn't look that bearish, even though we had a very bearish outcome yesterday. But, when it comes to price action, it seems like Kiwi has stabilized since then. You talk about Euro. Euro is showing underperformance, so that's the one trade I'm going after. Swiss franc is holding, not a whole lot of movement there. So really, as you look at the grand scheme of things here, all you got to do is focus on things that are moving. And one of the common mistakes I see with traders is when you are looking at pairing, you're pairing things that are not really moving as much. So it doesn't matter. It's a best looking setup, but that's really not where the price action is. So, always keep that in mind. And this is one of the reasons why we always say, focus on currency that's in play. And that's really where you're going to get the biggest percentage return. So let's go into possible trades and then take a look at things one by one. And this is where you have the opportunity to ask questions. Any currency pairs you're taking a look at, please let me know.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
All right, so let me just pull up our trading view here, and then let's just take a look at things. So here we are. Let's just start with the USD, or actually let's start with the yen, because that's where I think I had a lot of questions. So as you can see, I pointed out this early this week where, whenever you're getting this big key break of these levels, this is where not a whole lot of support, this is where next level support really comes down here. There's not a whole lot of support where we are at. So this is where I think it makes a better case for a continuation pattern versus when you have a lot of overhead resistance or under support where, prices seems to stall here. Now, this is a weekly chart. You can see I'm looking at a little longer term. You can see that this is what I was talking about last year where, July and August, this period, this window over here, look at the move that we got in the yen. So this movement this week, it kind of really reminds me of that from last year. So you can see that lasted for a few weeks. So I think this one definitely has some more legs behind it. Now, when I go into the daily chart, you'll look at this and be like, yeah, I missed a big move. And, if you haven't really taken part in this one, I totally understand where you feel a little bit more hesitation. But I think this is where you look for the right time frame, and then you look for the setups. So you can see that they were in, this is where when you go on 4-hour chart, I can see a lot of opportunities. Like, we got a gap on lower here, stayed lower, made a low base, and made another little low base, and then we continue to break. So if you're hesitating to figure out like where should I enter, this is where, I don't love trading on a daily chart where my candle is going to be so far and my stop loss is going to be so far. And, this is where I can take a reasonable shot, like especially with this kind of price action where you can see that price are staying in a very small, narrow range. So it's much easier to enter off this where it's just such a small percentage move. So you have to sit through a very small sideways price action, and then you get a big move here. And we are seeing the same thing happening again. So I still like this one. Maybe it's up for a little consolidation, but you can see price action is really weak. Now, if you want to study that price action and take a look at Kiwi, like what do you see over here? We see a big gap here on that news. Look at the big nasty candle. And we actually have, filled that gap. You see, like now this price action looks a lot stronger. And this is where I feel like a lot of traders would say, I want to short this little rally here. But this is where, why is it, I don't like the fact that it's already covered, that gap there. So this is where, it's not look the best from a price action perspective. So what do I think of yen? I think yen can still move lower. This is a 1 week move. Last year we had multiple week moves. I think that's where you look for some setups. So, you don't want to get it right there. You want to look for consolidation and bases or bear rallies to jump into. So the yen is really the one. Now the question is, how much more move is left in the yen? This is where you can go into the yen and take a look at the percentage change. So let's go back to the yen here. And you can see on a weekly percentage, like this is the biggest move as we look at last year. Last year, like I said, we had 2 back-to-back moves. Sometimes in the history, you will see that there's one big move down and with some consolidation. So, I think we have seen some back-to-back movements here. But yeah, looking for some bases, some bear rallies to short into. If you're already in it, this is where legging a strategy works the best when you have a nice direction in place. Now, dollar is the second one that I have a close eye on because, we talk about correlation. There's negative correlation between dollar and yen. And let me take a look at what happened last year. So 2024 last year when the yen had a big sort of a move here, you can see there was a big reversal that took place in the dollar here. And, where we are right now, we're not really seeing the explosive move, but I think this is also because the expectation for a rate cut is still there. But I think if those expectations diminish, as the yen continues to be the worst currency, I think dollar has a solid chance for this to even break out higher. So remember, we looked at that key level. When it broke that level, it just took off. We're not really seeing that here yet, but it has the potential to do so. So you can see that as this is a weekly chart, but you can see that this is, it's not the weakest currency that you look at. It's kind of picking up a little bit of momentum here. But if it does get above those levels, that's what I'll be interested in. So on a daily chart, you can see this is a key level where it is kind of finding its short-term resistance. But at the same time, when you look at a 4-hour chart, I actually don't hate this price action. You see, like this is on a 4-hour chart, this prior resistance becomes a support. And then this is where we are. That support stays there. Now, if you're looking for next level, I think that's the on a 4-hour chart, this is a beautiful pattern here. And if you're looking for a big breakout, that's the level that you're looking for a big breakout. And this is where we have been all focusing on yen currency pairs, but I think the dollar currency pairs would be the next in line for a bigger move. But like I said, for that, we just need a lot of things to go right. And one of the things in that is getting that a little better than expected economic data out of the US. I think that is going to spark some of that move. So yen goes on the top list, but again, 4-hour chart, like I said, there's a lot of good setups on 4-hour chart. So if you're having a hard time, if you're a daily 10, if you're looking at daily charts, I think, you can have better setups on some lower time frames as well. So that's really, that's the main one that I wanted to go over because that's where the movement has been. Now, when we take a look at Swiss franc, when you look at this, as you can see, it's retreating off the highs. I mean, this one, you can say that it totally rejected that breakout. And, I've been pretty vocal about, being careful because these are the currencies that have done so well in the last few months. You take a look at from where to August to where we are. So far, this day remains in an uptrend. But at the same time, I don't love it as a long. I don't love it as a short. And I think that's really where we are at. Now, when we take a look at euro looks a little bit better. And, if you take a look at euro level, this is a very strong level of resistance to where we're at. And if this, we are right at the 20-day moving average. If this breaks below further down, the next level of support is 50. Now, if it gets below that, then you know that we have a -2 on a trending score. And that's where, the currencies will have a little bit more room to give up some of the gains that we have seen from early this year. But again, we're still a little far from that. And that's why we have the Euro USD position, just from that perspective. But, we already move our stop to break even here. This was a daily chart that we looked over. We had a little bear rally. I talked about this in the last currency room. And this is broken nicely here. So our stop is moved right here. And this is where I love the trades where move your stop to break even. You have no risk on the table. And now you're in a good position to let that ride. If it does return and stop me out, that's fine. That's totally fine. I take stop to break even trades all the time. I'd rather take those trades than, trades where you get stopped out all the time. I think it's better to have these trades where there's not a whole lot of risk on the table. And, dollar yen was one of those trades that was the same thing. We got long right off this pullback when it got towards a support. And, we got long and then move our stop to break even. And then that thing just, this is where if you're trying to capture a big move, you have to let the trade ride. You're going for smaller moves, then you need to be in and out and go in with that plan where you're going to be in and out of position much faster. So you can see that in this one. I talked about it in Discord earlier this week. The target was about 154 because after breaking out this level, there's not a whole lot of resistance above it. So you can see that this is still continuing. And I think I won't be surprised if the dollar stays strong. And you can see on a 4-hour chart, beautiful little base here. And over here, there was a nice little base pattern here too. So look for these patterns to, look for that continuation. And remember, we talk about trading with the market direction. So when things are range bound, I look for support and resistance, and I don't really like to buy breakouts because breakouts usually fail around those situations. Now, when you have a nice direction in place, that's where you want to use legging in strategies. So you want to use bases and pullbacks and looking for continuation. So remember, it's all about doing the right thing at the right time. A lot of times we think we're doing the right thing, maybe it's just the wrong time. So we have to get those two components correct. Now, so we looked at all the major ones. Let me go over the pound, which again, I'm not totally interested in at all. You can see the reason why. I talked about this earlier this week. Every time we get to the resistance, I'm always doubting when you have that strong resistance in place, and not surprised where it falls again after breaking that out. So that's why, you can see right over here, it did break above, and then now it's falling back in range. So not my favorite currency here on British pound. Now, Canadian dollar has, done well we talk about this very important level of support, and now we actually gone off nicely above that. Here we are with the previous high here. So if you're looking for CAD to the long side, I think that you're going to look for, again, same thing, look for patterns. We got a nice little double top here, getting a little of a pullback here. But if it does break above, I think that will be a nice extension to that move. Now, while all these things happening, I'm surprised, or again, I'm not surprised. I think because the market trends are pretty strong, the Aussie is actually finally doing what the market trends are doing. As you can see, this thing is staying, nicely bullish. And again, as long as the market stays bullish, I think the, Aussie will likely do outperform. And then here we are with the Kiwi, and I talked about this as well. This is the price action where we'll get look at the tail on that candle. It's still in a downtrend, but I just don't love this as a short here. This would be a decent short if it just comes up a little bit here and rolls over. But the fact that it does a full gap fill, I'm not really a big fan here. And this is where I get the question, should I look for a long here? Well, this is where it's all about risk to reward. If you like that opportunity based on risk to reward, you can go for it. It's not always about finding the best looking setup. Sometimes it's just about, finding the right thing at the right time. And as long as the reward to risk ratio makes sense, now that's where you want to be. And again, in that case, we can also take a look at things like, Euro Kiwi. You can see that, remember Euro Kiwi has been one of the very active currency. You look at the movement that we've had in the last, even just in the last month, and look at the bearish, look at the full sort of a bearish candle here. So I wouldn't be surprised that if we have a little bit further pain. So I think this is where if the Aussie is doing well, if the Kiwi is doing well, the money's not going to go into the euro or even in the pound, because it's all about following where the money is going. And remember, all summer, money went into euro, money went into Swiss franc, money went into a little bit pound, but Aussie Kiwi didn't really do well. So right now, that's really where the money's going. And again, the money's coming out of the yen. Where is that money going? I think money's going into the dollar. So it's all about following where the money flow is going into. So these are the ones that I'm looking at. One last pair that I was kind of paying close attention to. If you're trying to decide, hey, I don't know if the Aussie is still the best or if the Kiwi is still the best, this is a chart that I find interesting. Here's the reason why. I talked about this last week as well. I mean, take a look at that level. This is a 10-year high on Aussie Kiwi, and in the past, that level has been a good reversal point. Now, as you can see that we did reverse right off of that, and now we're getting a very nice little bullish candle. We did break out last night on that news, but then it just fell right back in the range. So now this is interesting because is it going to break out or is this going to reverse here? Because if it does reverse from here, then I think Kiwi probably be better long than the Aussie. But if this continues to break out, then I think Aussie is still going to be a better long than Kiwi. So if you're trying to decide, take a look at Aussie Kiwi. I think it looks interesting to me here. With this, here's the kind of a double top here. It's just taking a little break here, but we want to see if it does go up or does it go down. So this is where, put the high and the low and then see which level it breaks first. And that's where we want to make that adjustment. All right. So those are the things that I'm looking at. I'm pretty clear at. If there's anything that you're looking at, just let me know, or if you have any questions. Otherwise, we'll just wrap things up here, and then we'll be continuing our conversation on Discord as the week comes along. All right, so it looks like we're all on the same page here, and I'm very happy to see a lot of traders are doing well, and this is where you want to be taking advantage when things are good, and trade more when markets are doing better, and trade less when markets are not doing better. So always keep that in mind. So have a good rest of the week. Yen again remains the best short. Focus on currency in play, and I'll be in touch in Discord as the markets progress here. Thanks everyone. Have a good day.